Good morning. I'm Malcolm Graham-Wood, and today I'm on Core Finance doing my CEO interview. My guest today is actually Managing Director George Lucan of Angus Energy. Welcome back, George.
Thank you, Malcolm.
It's great to see you again. It hasn't been long since we spoke, but there's been a lot going on, so we're keen to have a further chat. Just for those people who don't know that much, who might be looking in on Angus for the first time, do you think you give us a quick overview of the business?
Yes, Angus floated back in 2016 with a range of assets down in Kent, Surrey, and West Sussex and Surrey, and very much with a view to exploiting the Kimmeridge Reservoir across the Weald Basin. But we've evolved somewhat from there. That's partly because the Kimmeridge has proven in Baulkham to be quite difficult. To actually assess. I think we're still learning process there. So one of the decisions I took was to diversify slightly away from exploration and into production. And last year we acquired a formerly producing gas asset, which was once the largest onshore UK gas field, and that had been stranded. It was owned by a large conglomerate until recently, and they had taken the view that given their cost base, they would be unable to effectively reconnect that. So we've moved away from being a pure exploration house into a more diversified oil and gas exploration and production company. Now that would be my principal overview, and we continue to move in that direction. We're not going to abandon exploration, but we definitely have a preference for gas, and we have a preference for cash producing assets.
Excellent. So last time we spoke about Salt Flippy, and I think it's important that we kick on there today straight away. You recently announced a deal with the National Grid, the gas construction agreement. Probably important to tell us all about that to begin with, if that's okay, George.
Yes, absolutely. Well, if I preface it with a set of milestones here. When we first acquired the field, people said, "Oh, well, you've acquired just a bag of abandonment liability." And so we got in some experts and they said, no, abandonment liability is what you said it was, roughly 2.5 million. And we promptly decommissioned two of the wells, two of the 8 wells there, well within budget. The next thing they said was, well, they kind of left all that gas there, so the reserves are wrong. And so we got in a third party competent person, looked carefully at the field, took 6 months. And they said, no, you've got at P90, 18 odd BCF, and your mid case gives you a present value of those reserves of 25 million. That's P50. So that's 5 or odd times our market cap. So we were very happy with that. And then there was, well, you'll never be able to reconnect it. And this is where we are now. So we sign a construction agreement with National Grid. That's one half of the actual connection work. So what National Grid won't allow anyone to do is to do work on their sites, as you might imagine. It's $1 billion piece of hardware, our grid, and no one gets to go on there except their contractors under their supervision. So signing this agreement gets them to commit to doing all the necessary work and to really quite complicated valving, all remotely operated up there in Lincolnshire, and telemetry. So they've committed, when we signed that agreement, to getting on with that within a sensible time frame. They had actually done a lot of the long lead item ordering, but if you like, it's a very clear third party endorsement that we can and we are going to connect any which way.
So the next thing is pipeline, and we talked about this briefly last time. You said you've got a 600-meter pipeline to connect. Where are you on that front?
Well, yesterday I was up there in Lincolnshire plodding around in muddy fields. We're doing a site visit for which is preliminary to a HASCON, which is happening today. A HASCON is when all the contractors get together and they look at the hazards involved in constructing a site. So that will be happening today. That's being managed by a third-party specialist. We've appointed a principal designer and a principal contractor, who will be organising all of those. So we've got some horizontal drillers there, we've got some trenchers there, we've got two different types of pipe, as you know. We've got hydrogen-ready flexible pipe for a small section of it, and we've got some regular steel 10-inch. And there isn't any problem putting those two together. We've been over that one in very considerable detail. So that's quite exciting, because after the has-con, I'm sorry, with all these has-its, you get a has-id, and we'll probably try and do that toward the end of next week. A hazard is when you sit down and you try and identify all the conceivable hazards associated with the pipeline in general when it's actually full of gas. That's a really important step. And it's followed by a has-op, where you go through and you try and develop all the procedures you're going to need to monitor, supervise, maintain the pipeline, and have emergency procedures for dealing with anything that might go wrong. So a has-op would follow a has-id, which follows a has-con. But we're well into that process. It's happening week by week. It's being very professionally done, and I'm very impressed by my team.
Excellent. And you've got a gas processing plant on there as well, haven't you?
That's that we already have planning permission for. I should say we haven't completed planning permission for the pipeline. We're waiting on that. Expect that the latest in early September, or a decision at any rate. The planning permission for putting the site together is already there. So curiously, we haven't actually, that's going to be for us the second stage. We want to get that pipeline done before the rains kick in Lincolnshire, because otherwise the guys are going to be welding with underwater welding tools, and because the water table up there is very, I mean, most of quite a lot of the land is floodplain, as you probably know, and it's not something we want to even be trying to do come November, December. I would be very, very upset if we end up with it.
So you've got, so where are you in terms of all the various planning consents that you need? You've got one, you've got one waiting to come through. You've got anything else you need after that? Well,
the next big bunch are health and safety, and that's why I went through that process of has-id and has-con.
Right.
They will look at what we call our safety case at the end of it, and they will see how thoughtful we've been about it, and where all our emergency procedures are. They'll look at our major accident prevention document, and they'll say yay or nay, not to the construction of the pipeline, but to its ultimate operation. So that's a really big approval for us down the line. As I say, we don't need that too much later in the year, but of course we don't want them to turn around and say, well, you dug it the wrong way. So we've been in constant communication, but it's a big one for us. And the next big one is when that same executive, the health and safety executive, look at the site itself, and they say, well, okay, have you got all the safety procedures in place? Because here we're dealing, this is not like the wheeled oil situation.
Yeah.
Low pressure oil was, this is 75 times atmospheric pressure. When anything breaks, it flies all over the place, and it's very considerable exercise to make sure everything's done safely for the next. And remember, we're planning for 10, 12 years, conceivably, on this field.
So one should be expected, I mean, in the middle of July now, so I'm sure you'd like to get one by September or so. But before you took it over, the previous owners, when you said they had it sort of almost production ready, did they have quite a lot of the planning in, or were they waiting to go all this process as well?
They would have had to have gone through this process, and no, not being unfair to them, but they were, huge company, and the cost even of planning, the machinery.
Yeah, I think we're aware of the fact that the good thing is you're nimble because you're smaller and you've got good quality people. And putting all that together, when do you think that it will all be? I mean, I know I'm not expecting you to tell me when you're going to get the planning, but on a sort of medium case basis for planning, and when would you expect to complete all the work? Because I know that you've got an idea of first gas time as well, haven't you?
Yeah, well, we'd hope that, as I said, we get pipeline planning in early September. It gets us straight onto the fields. We've already spoken to all of the landowners, and we try and complete that before mid-October, before the rains. But then we can then at leisure bring that pipeline safety case into play. Meantime, in October, November, you start seeing kit come on site, big kit, chunky bits of machinery, and that starts to get stitched together. There follows a period of commissioning. Now, how long commissioning is going to take, and that's very, a lot of health and safety, and National Grid also will be overseeing that, making sure we're providing all the information and guarantees that we should be providing to them. So that is a process which I can't be definitive about. We've said, let's get most of that work, construction work on the site, completed in Q4, and the commissioning begun, and first gas somewhere around New Year. Now, if it slips a bit, Malky, I'll be honest with you, it's a big project.
Yeah, I understand.
But I'm not
going to. I won't come running after you saying you promised on that interview that it'll be done by the end of the year. So no, it's all we need is a sort of some guidelines. We know how difficult it can be. If we find you growing Brussels sprouts out there, we're going to be worried about it. But so what? Assuming you come in 1Q with first gas, what? Have you got something that you've published for the general public about what annual revenues are likely to be for you when you get underway?
Well, we have in the CPR. We're looking at, I think we've said 3 million net to Angus. That's on quite a low case, actually. I think we can do substantially better than that.
Yeah. But
right now, as you know, we've got a gas price at historically low levels. So, I want to say one thing about that because it's really helpful. We've got gas price, I think right now it's at 15p a therm, and that's pretty much irrelevant because it's July. We've just had COVID, clearly oil price shenanigans going on, and with the tail end of the US shale gas. So loads of things have driven it this low. The average for the last 10 years is about 45p. In the last 5 years, maybe 42p, something like that. That's not, in fact, the price used in the CPR. The price used in the CPR is about 38, 39p net of transportation costs. And if you look at the forward curve on the ICE exchange now, I think it's nearer the 30p mark. If we were to sit back and do our analysis, and Shell and Total and everybody else would do their analysis on 15p a therm, well, we'd all be bust. There isn't a company out there. The only people who'd be left standing are the Qataris, the Russians, and the Saudis, because they're cheap enough producers. But pretty much every private company is gone. So you have to take a sensible view about a 10-year asset. And we've opted, I think, in that CPR, as I said, for about 38p a therm. We'd probably break even. I hesitate to say this, at 17p a therm. And we make money, good money, anything above 20p a therm. But look at this. Remember, it's 10 odd years, and you have to take a view. Equally, I could say to some of our detractors, well, let's take our P10 case when we really squeeze the reservoir like a miser would a toothpaste tub in the 1950s. And we get out all of those reserves, and we get the high point of pricing, which was probably 85 pence a therm in the last 10 years. And then you have £500 million worth of gas there. And no one is saying that. We're not saying that. But equally, we don't believe in 15p a therm or even 20 for the next 10 years. We still stand by our CPR, and he's saying a mid case would be about 25 million quid of value in this field. And
I think that's very fair, but no one's, we're not sticking you on that yet, and we all know what can happen to gas prices, and we've seen it all over the place. Right, I think we've done Salt Fleetby. I don't think we've missed much on there, but you mentioned Baulkham in your overall, and in fact, Baulkham is something that I often get people ask me about. So tell us, where do Baulkham and Baulkham fit now into the strategy and overall for the company?
I'd say, first of all, to some extent, Baulkham is a legacy asset, and the Weald is a place where we started as a company. What I don't like doing, I'm sort of quite mean as a person, is walking away from things. And actually, I think Baulkham, even the Portland there, has got good money left in it for shareholders. and certainly enough money to make back everything we put into it over the years and some. Baulkham, I genuinely believe, and we all believe here as a technical team, is a much better prospect than Baulkham was in terms of the maturity of the Kimmeridge from geological maps at that point. So we are hopeful about it. We've tended to advise down to sort of 300-400 barrels a day, really so that we don't whip up the same Ferrari and then get castigated with the same stick that we did on Baulkham. Now, I want to stress here that oil exploration means what it says. It's not oil tourism. It's not oil pick up your laundry. It's not oil visit your grandmother. It's oil exploration, meaning you don't know what's down there. And we had bad luck with Baulkham. And we were as cut up as any of our shareholders, watched all the options lose value and all the work we'd done for 2 years. But it was exploration. Baulkham, we feel, is much nearer a quasi-production risk profile in that it's been drilled, it's shown oil. Baulkham hadn't shown oil in any significant quantities. Baulkham really has. We want to manage that very carefully and get back, at least get back what we paid for it and then some. So not writing off those assets, but they are legacy assets, and they don't fit very well in our preferred route, which is gas in UK and Europe, and small amounts of it where we have a cost advantage over other players.
Okay, and whereabouts do you have planning permission problems in that little?
In that area? Well, we've had Baulkham, yes. Baulkham ran into the planning officer's recommendation to refuse. We didn't bother to go on to committee because it's very serious when the planning officer says that. And he was doing that very much on political grounds. I said political grounds in terms of their assessment of the relative strength of the national requirement for onshore production versus the national like of areas of outstanding natural beauty. And he felt that the argument had shifted in favor of the AONB against onshore production. We feel that actually our footprint there is tiny. Visibility is tiny. Noise is tiny. We really think we're less of a problem than local dairy. But we have to address these. So we've gone back, rejigged that planning application, and we will submit that again within the next, ideally this month, but whenever is absolutely appropriate. We've pretty much completed that work. And I'm hopeful about it. You know, we've had successive planning approvals here. I don't see any real reason to tell a commercial, entity just to, sink 5 million quid into a project and turn around and say, well, the AONB looks particularly beautiful today, so sorry.
Okay, now we've gone through most of the operational matters. I think a quick word on the finances would be useful. You can break them up whichever way you like. I mean, the question would normally be, what sort of cash do you have at the moment? It might say, what does the balance sheet look like? Do you have any debt? Cash burn? How are you addressing your G&A? All sorts of things. Why don't you just talk me through your sort of financial situation as you see it at the moment, George?
Yeah, well, we've got a decent float of cash. I prefer not right now just to get down to the last 100,000 here or there. We've got a decent float. We're not anticipating racing to market in a panic because of to pay directors' salaries, as it were. Equally, I haven't been furloughing staff. We have age-old core members of staff. I've needed every single one of them working 15-hour days and weekend to do this project. And there was no question of furloughing them unless I was going to be cheating on the scheme. So that's one part of it. Rent, as part of our overhead, is something we will take down. So our lease on our London office expires in September and it will go. And we will hot desk down to 4 desks. We've really worked well using these Zooms and WebEx and Teams. The great document sharing. We have online project management software now. Everything is remote. And it's working really well. And staff, young and old, they like it. So what is the point of having an 8-desk office with a meeting room in London when you can get away with 4 desks rented somewhere, and I would hope you'll see a very significant reduction in our overall real estate bill. I just say at the same time that real estate bill is for sites. You know, you have to pay for Baulkham, Leeds.
Yeah.
Saltfleet is 2 sites and a Louth warehouse on an industrial estate. So there's a bit there which we can't get rid of, which is operational. But anything we can that you know, don't have a fancy head office in Mayfair with portraits on the walls. It's functional, but even now we're saying it's too big, and we will get that down. That goes in September.
Fair enough. So you look pretty lean and mean. You've got a new team, or you've been building the team. I keep noticing that you're sort of adding technical people. Obviously, given what you've already told us about Saltfleet, be that the high level and the nature of the technical people there, not just the consultants and so on. Tell us a bit more about the team that you're building there, and you know, how that is affected by the fact you've got a high pressure gas field to run.
Yeah, well, we actually got 3 or 4 important hires. Well, 2 were inherited. So we got a director of operations who came from Saltfleet itself, who worked for many years with Gazprom in effect, and before that Candeca, BP. He's got 25, 30 years of experience in gas. Our technical director is ex-British Gas. He's got 25, 30, probably more. You'd be insulted by that. We took on board also our process manager there. He's got 25 years in gas. We've just taken on board this weekend on a 6-month basis, a trial basis, a process engineer actually dealing with the actual compression and refrigeration. And he's got the most amazing CV, 25 years. We've been very lucky. We've taken again on board as consultants at this stage 2 people from Quadrilla. Quadrilla, as you know, it's basically gone quiet following the fracking moratorium. So we had an amazing opportunity to take on some compliance staff. And I say compliance because they had the compliance scrutiny, the worst in the industry. So, and they have the best procedures in the industry because they had to have them. So
I remember,
Yeah, they've been rebuilding our entire compliance infrastructure, and we need that. You know, we were set up to some extent as a wonderful cowboy exploration shop, and great fun and everything. I don't want to say they're cowboys, but now we actually, you know, managing high pressure gas is a different game, and there's a lot more planning, a lot more regulation, and you need management infrastructure. You can't you can't be quite so typically Anglo-American in terms of playing with oil and gas, you know.
I understand. You very kindly given me 20 minutes or more of your time this morning, George. I always ask people before we finish to give us a roundup. You know, you very adequately described Saltfleet and the situation at Baulkham and Baulkham and so on. But where would you like to see, or where do you really think that you might see Angus in sort of 18 months' time?
Well, I think
say the end of 2021.
End of 2021, I'd like to see Angus having proven concept at Saltfleet, having already put its toe into another similar but smaller, probably gas producing asset, and showing shareholders that we intend to build on experience and build on our cost advantage, and genuinely grow this company in sensible jurisdictions in gas, and be making a decent pile of cash for them on the way.
Well, that's excellent. I wish you the very best of luck. And from what I can see, you're doing a great job doing that with your team. Thank you very much indeed, George. It's been great to see you again. My guest today has been George Lucan, Managing Director of Angus Energy. My name is Malcolm Graham Wood. I look forward to seeing you all again on the next Core Finance Executive interview. And thank you very much for tuning in today. Bye now.